Hello, crypto friends, and welcome to another episode of the Market Report. I'm your host, Benton, and we are joined by our co-hosts, Jordan Finiseth and Marcel Peckman. Jordan uses his background in psychology and human behavior to spot the emerging trends in the crypto markets. Marcel Peckman applies his 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. What is up, Jordan, Marcel? Yet another wild week in crypto. How are we feeling this week, guys? Marcel and Jordan, what is up?
Hi, Benton. I'm still laughing from the European Central Bank. I've read something they wrote, like the inflation is high currently because it was too low over the previous years. It's a complete freak show. They are completely lost.
They're just making stuff up now. This is transitory. That and I'm like, oh man, the system is like it's a sinking ship, or it's a flipping iceberg, slowly turning over. I'm like, man, they're just trying to make up excuses.
Exactly.
Are you talking
A lot of
about
narratives floating around.
Ethereum or European Central Bank? You got me lost here, Jordan.
I'm talking about central banks in general, but Ethereum is its own beast, right?
Exactly. Well,
Sorry,
we would
guys.
like to welcome everyone for tuning in from around the globe today. Tell us where you are watching from. We are happy to have you here on today's show. I know we have some big stuff lined up. We are going to be giving away a 1-month subscription of Markets Pro, $100 value. And if you use the platform, you may find that the $100 value is going to be very, very nice to have, because you're going to have access to that full gambit of Vortex scores, Newsquakes, Markets Pro. So make sure you leave your comments and questions in the chat today. We're going to be selecting the top comments or questions in chat. And at the end of the show, we're going to select a winner to give away that 1-month subscription. So make sure you are chatting it up, leaving those questions in chat today. And also, if you are just interested in getting involved with the Markets Pro platform, we have a 20% off discount code that can be found in the description to this video. I know we got a lot of stuff. Looks like Cal Toro's watching today. Always love to see that. And we have tons of, it looks like other people returning as well. Luciana, Mayer, Madius, we love to have you here. Thanks for joining today's show. I know we have a lot to unpackage. We are going to get into our markets news today. We're going to catch you up on what's happening on crypto Twitter and dive into some of the biggest headlines this week. We have a big guest today, Michael Kong. He is the CEO of Fantom Foundation. He's going to be talking to us about the DeFi ecosystem, Fantom ecosystem, what's going on there, and some general market topics. And then we're going to talk about the coin watch for this week using the Markets Pro platform, which coins have been pumping according to those Vortex scores and Newsquakes. And then we're going to get into Marcel's expert take this week. He's got a lot to unpackage about some conspiracy theories that you guys do not want to miss. So let's go ahead and jump into our Markets Pro segment, or Markets News segment for today. And I know we got a little tidbit that we're going to show you guys first. So let's go ahead and get into that. Are you guys buying the dip? Are you jumping ship? That's what we want to know. Let us know in the comments below what you all are doing. I know a lot of action has happened on the market this week. Bitcoin has been taking a dump. A lot of the market is kind of trading sideways right now. What are you guys doing in general? I want to know from Marcel and Jordan, just before we kind of jump into the news here. Quick thoughts about what are you doing? Are you buying dips? Marcel, what do you think?
Benton, I don't think anyone who has been outside the market for the past 6 months should be buying right now. Either if you have been buying for the past year, like average in, okay, it's a good point to buy. Other than that, if you are a short-term trader and waiting for panic, market is not panic right now. This is normal volatility, nothing weird happening.
Yeah, like I've been saying for a while now, I'm like, take profits, take profits. Do I want to put the money that I took profits back in the market now? I'm learning to resist that urge, because sometimes you need money for outside things outside of crypto. But there are some nice deals out there right now. Like, it's hard to pass some of these up. That's for sure.
I see a lot of people chiming in on the comments right now. A lot of people are holding. A lot of people are getting in on this dip. So it's glad to see folks that are watching today are taking advantage of this discount in the market, if you want to call it that. Do want to pull up a quick headline though here, and this is an article that your one and only Jordan Finnis that's actually wrote, lot to unpackage this week, and he talks about 3 reasons why traders want to buy the Bitcoin price dip. So this is a great segue into this article. As you all know, previous all-time highs last week. The market right now is kind of sitting around this these kind of like 50K levels. And so I want to kind of get into some of these charts here that Jordan had inside of his article. And we want to kind of break down some of what's happening right now. And so like with this chart in particular here, we saw all of these reversals from previous patterns, these big green candles. And then we saw these massive legs up. Then we saw some pullbacks. And that's exactly kind of where we're at in reversal here. And these support zones, support zone is areas where it has bounced off of previously and gone back up. Resistance zones are areas where it has tried to break certain price levels and gone back down. So right now we're kind of in between these levels. We're actually lower than this right now, or we're probably closer to these support zones. So quick question for you, Jordan, since you actually wrote this article, where do you think we're heading next? I mean, we're kind of sliding a little bit below that 58 level right now. What are your thoughts?
Yeah, I think from like even that article, there's another chart a little bit below that posted by Michael Vandepop, and it showed he even gave a target. He's like, we could go down to 54,000. That's not out. I think it's below that. Yeah, that one right there. He kind of gave that one as like a 54,000. He's like, it's a potential for it to go down to here. And a lot of the analysts that I've seen have had that. So after seeing all that, I'm like, oh, this downturn right now is not catching me off guard, because a lot of the smart analysts were just saying like, it's going to pull back. But everybody at the same time, they're all saying, and then it's going to take off like a rocket. That concerns me when everybody's saying the same thing. But I don't know. What do you think, Marcel?
I think chart analysts will always find a bear and a bull case. So I don't think it's worth discerning that. But surely there's a good possibility that we're going to see down to 52,000. I think it's quite possible because of the regulation news, stable coins events, the ETF rejection. There are a couple of bearish potential news coming out, especially from United States regulations. So yeah, 52 is a possibility.
Yeah. So Marcel, does that scare you at all? Like, does that make your outlook for the rest of the year any different?
No, Benton. A 17% drop from the top, which was 69,000. It might seem too much, but not for crypto markets. Bitcoin's volatility is approximately 3.5 or 4%. So a 17% drop in 3 or 4 days, it doesn't change the bull trend, the case that we're seeing of governments printing money endlessly and inflation starting to spike. So people are going to seek for inflation protective assets, and Bitcoin and crypto is one of those.
And so this was another chart that was in the article that Jordan wrote from Alan AU. And so he kind of walks us through the waves that we've seen in other cycles in 2013, 2017. And so one of the things that he kind of notates here is like this green circle that you're seeing is where we're at and where we're at in previous cycles. So he's claiming that we're kind of at this 6th wave on about to go up to this 7th wave. Is there any validity to this, Jordan? Like, do you kind of take this into account at all when you're making trades or just kind of looking at the overall market?
I think that these things can be more reassuring for people, but like the whole saying, markets don't repeat themselves, but they rhyme. It's possible that this plays out like that, but I don't know. For me, I just take the fact that like everybody's been pumping this $100,000 Bitcoin price by the end of the year, and everybody's kind of been banking on that. And now everybody's getting gut punched, like, oh, it might not get there. And I'm like, yeah, because this is nobody could completely tell the future, and like things will change, but like the long-term trajectory is up in our opinion. I don't know. I'm speaking for you guys, even though I probably shouldn't, right? But I think like nothing has fundamentally changed in the whole backdrop of what's going on with crypto. So like if it's going down, like buy the dip. It's a good opportunity to buy the dip if you got some free cash. If you think cryptos are here long term, don't listen to all this stuff. Like don't watch the news so much. It's going up long term. It's gonna do a lot of up and down in between because that's what keeps us all interested.
Yeah, and I mean, I do want to also reiterate that in previous bull runs, we've seen these 30-40% pullbacks in the past. I mean, look if you're just looking at this image here, you can see from wave 3 to 4, there's been significant pullbacks that looks like probably the 30% pullbacks that we've seen. I do want to kind of shift gears here. I know we're talking a lot of Bitcoin. See a lot of folks in chat talking about Fantom as well, and I know we're going to have the CEO on here in just a minute. But we want to kind of touch on Ethereum today. Where do we see Ethereum heading next? This was an article written by Yashu Gola. Ethereum price risk losing 4K on rising wedge breakout fears. Let's pull up this chart that Yashu has in his article in particular. To me, when I look at this chart, I do see this trend line, and it has continually just bounced off of that trend line. So this makes me think that if we kind of continue this, yes, there's going to be more drops along the way, but I think in the long term, I still remain bullish. And you can see he has kind of a moving average with those fib levels topping out there. But I mean, what are your thoughts on this, Marcel? Do you see Ethereum losing its steam in the months ahead?
Benton, to be honest, I was more bearish with Ethereum a couple of months ago, because the gas fees keep going up, and people said that the latest network upgrade would reduce these fees, and that was a lie. And still, DeFi sector and NFT sector are thriving on Ethereum. Its total locked value surpassed $85 billion, even with that 50 to 60 gas fee. So I don't think Ethereum is going down, not in the short term. I think the trend continues to be up.
I think this is a good chart to look at for Marcel's segment when he talks about manipulation. Look at that channel. Like, you don't see many like perfect little all the way up. Like, yeah. I didn't come up with that. I saw that on Twitter by more than one person. Like, yeah, that's not manipulated. So I don't know. There's something fishy going on, but this is crypto. It's like Marcel said, DeFi and NFTs for the most part are on Ethereum. I can't wait till more things maybe move over to Fantom, because it's a much faster and less expensive network. But let's just see. We'll see how Ethereum 2.0 comes along over the years. But yeah, that's an interesting channel right there.
Yeah, exactly. And so it also have this wedge here that's saying that we could potentially drop out of this wedge for Ethereum. I still remain bullish on Ethereum. And I think we're going to kind of hover around this 3,500 to 4K mark. And we could see this kind of explosive end of the year heading into 2022. Quick kind of other headlines. McDonald's was potentially talking and responding on Twitter. They didn't confirm or deny, but potentially taking Shiba Inu as a form of payment. According to CoinGecko, SHIB is currently the 11th highest ranked crypto asset in terms of total market capitalization of 26.9 billion, and suggesting that ETH whales hold roughly 9% of SHIB in circulation. So quick takes from you all. Is SHIB going to become a form of payment? Like, Jordan, what do you think about Shiba Inu?
It won't, as long as it's on Ethereum. I know somebody and I've read about the Shibarium. They're making their own chain. If that's possible, if they do that and they got some low fees, maybe. But if it's on Ethereum, nobody's gonna be buying a Big Mac and paying $100 in a like transaction cost. No.
Marcel, what do you think?
Yeah, I agree, Jordan. If you think it through, Dogecoin at least has its own blockchain, so it's separate from Ethereum, from Bitcoin, and it has its own updates, its own problems, its own community. So I don't see that going on with Shiba right now. So I don't think that can be translated into money. Not right now.
Yeah. For those watching, make sure you're putting your comments in the chat today. We're going to be selecting one winner for a 1-month subscription to Markets Pro. You're going to want access to this platform, and we're going to walk you through some of the benefits of being in Markets Pro a little bit later. But make sure you're dropping your questions, your comments. We want to hear from you today. I see a lot of people talking about Fantom, and they're super excited for us to chat with Michael. So let's go ahead and jump over to our guest today. And if you haven't liked and subscribed, make sure you do that now. We're Cointelegraph on YouTube, 12 p.m. on Thursdays. The Market Report. We love having you all here. Lots of folks tuning in. Tell us where you're tuning in from around the globe today. We want to hear from you. But let's go ahead and jump into our guest segment for today with Michael Kahn from Fantom Foundation. All right, folks, we have Michael Kahn, who is the CEO of Fantom Foundation. He studied information technology and finance at the University of Sydney. Fantom is a young and fast that uses a unique consensus mechanism. Michael, thank you for joining the show today. It's a pleasure to have you on. How's everything going?
Hey guys, yeah, thanks so much for inviting me on. Glad to be here, answer your questions.
Awesome. I know it seems like we have a lot of Fantom fans in the chat today. So we're going to be kind of pulling up some random questions along the way. But my first question for you today is transactions on Fantom can take as little as 1 second to complete. Like, what is behind this magic? Because I think a lot of chains are trying to achieve this today. How is Fantom able to accomplish this?
The way it works is basically because the transactions are processed asynchronously on the network. So, essentially Fantom is a technology stack. It consists of like multiple components. So the base component is like the asynchronous distributed ledger that we built, over the past few years. And that's integrated with the EVM on top, the Ethereum virtual machine, plus like tooling around that, related to, for example, like RPC cores and Web3 and GraphQL and all these like different like API services that the foundation has provided, or other services in the community have provided. So essentially, the only difference between, say, Ethereum and Fantom is the way that transactions are processed. So I like to kind of use a train analogy in that the way that Bitcoin and Ethereum work are that blocks come, approximately, say, for Bitcoin every 10 minutes. So when a transaction is lining up or like represented by a person to get into a train, you would have to line up in a queue and then wait for the train to arrive. And then for you to be processed, you would have to be able to go into the chain, train, which like you can think of as is kind of like a block with a limited capacity. And so, if you're able to get into the train, then you got to wait to be confirmed by the rest of the network, or you got to wait for the next train to arrive if the train capacity is already full. Whereas like the way that Fantom works, because it's asynchronous, it's kind of like a train on demand. So as soon as you arrive at the train station, a train will arrive and you can enter the train along with the surrounding transactions that entered into the network around the same time that you did. And you get entered into what we call an event block, and then that event block gets passed across the network to get your 2/3 + 1 consensus. So in other words, like as soon as the transaction enters the network, it automatically will start getting confirmed by the network. And so you don't need to wait for a block to be mined at a particular point in time, which might be like 15 seconds or a minute or 10 minutes. The other difference is that finality is deterministic. So you only need one block confirmation after you've got your 2/3 + 1 consensus from the total validating power of the network. So it doesn't work based on any longest chain rule or any probabilistic finality. It's all completely deterministic after one block. So there's no need to wait for, say, 5 or 6 blocks after your transaction has been mined in the previous block. So that's how we're able to achieve like the fast finality that we have at the moment, as opposed to more synchronous networks out there.
Are there any compromises to like security that you had to make in order to achieve this? I know Bitcoin focuses a lot on like the security. Is it as secure, would you say, or are there any concerns there?
Yeah, so there's this thing called the blockchain trilemma, which is essentially a trade-off between free aspects or free desirable characteristics you want on your chain. So it's like availability, it's security, and it's decentralization. And usually they say you can only really optimize two and not have so much of like the third option. So kind of like how Fantom works is that it's like based on like security and availability, and there is a level of decentralization there, but we're still bounded by the number of nodes that are participating in the network. And that's kind of like the drawback at the moment, is that we only have around 50 or so nodes that are confirming transactions on the network. So it's not super decentralized. That being said, you could also argue that Bitcoin and Ethereum are not decentralized in the sense that there's a lot of computing power which is concentrated in a few providers rather than across many different miners. But there is still a bit of that trade-off going on. What I think the asynchronous processing of transactions allows you to do is kind of optimize that trade-off. So you don't have to give away as much decentralization as you otherwise would if you were, for example, like running just like a couple of nodes in order to achieve speed. Because the asynchronous processing of transactions allows you to process transactions on demand rather than having to wait for blocks to be mined. The real difficulty of having an ABFT algorithm is how do you get the ordering of transactions in the network? How do you get the final ordering of transactions? And that's what a lot of the developers have been spending their time on trying to figure out on how to do. And we have a solution to it now that works to a reasonable degree that we're looking to improve over time.
Michael, I see that DeFi is becoming a big thing on Fantom. As I've seen on DeFi Llama, the TVL reached $5 billion, which is significant. So I want to understand how the stable coins, the FUSD, works.
Yeah, so FUSD is a stable coin that we've been working on for a while now. And I know that it's something that we've kind of been a bit delayed on, but now we're reviewing the way that auctions and liquidations work around it. So FUSD is essentially like a debt-based stablecoin on the Fantom network, a native debt-based stablecoin. So people are able to collateralize their FTM, or better yet, their staked FTM. So you're able to stake your FTM, earn a yield on that, and also take that FTM and collateralize it to generate FUSD, which is supposed to be pegged to the US dollar, and be able to use that FUSD ideally across like the Fantom DeFi ecosystem for lending and borrowing and earning additional yield and doing more things with it. The auctions and liquidations model that we have right now, it's quite similar to the way, for example, DAI works. So if your FUSD is under a certain collateralization ratio, then your collateral gets progressively liquidated over time. The big difference, I think, between like what we have on Fantom compared to what how DAI works on Ethereum is that because the network finality is a lot faster than say on Ethereum, the liquidations and auctions process should happen a lot faster. And so it should be a lot more secure than say on Ethereum, where the big issues are that you get delays on the network, you get delays on Oracle updates, and so the prices may not actually accurately reflect on the network. The prices might not accurately reflect the actual network, the actual prices in the real world. So the auctions and liquidations are currently being tested in the testnet. FUSD is still out there; it just doesn't have the auctions and liquidations. But that's essentially how we want it to work.
So, Michael, how does Fantom intend to overcome limitations of like previous generations platforms like Ethereum, who we've seen kind of struggle here to roll out ETH2?
So one of the so there's kind of two aspects to it. I think there's like working on the core consensus, and there's working on the middleware. And actually, the middleware doesn't get as much attention in terms of scalability as I kind of think it should. But like talking about the core consensus, so as I mentioned before, big advantage that I think Fantom has is being able to asynchronously process and order transactions. as opposed to Bitcoin and Ethereum. So that's one advantage. The other advantages are that we're working on improvements to the technology. So, for example, data pruning, our own version of SnapSync. We're starting to investigate different aspects of sharding, and if we can also use IPFS for storage. So we hope that those sort of technologies can improve, the core consensus that we have at the moment. The other big scalability improvement has to do with the middleware, because the EVM is not a very efficient virtual machine. And it's not so much that executing the instructions on the virtual machine is slow. They're actually quite fast. It's more so that the way that reads and writes to data that occur on-chain via the EVM, that's what's really slow. So more technically speaking, it's the execution of what are known as S-load or S-store operations, or read and write operations from the data on-chain, because the way the data is retrieved, the way that the algorithms work, they get progressively slower over time as the chain gets larger. And this sort of limitation applies to any chain that uses the EVM, whether it be Fantom, Ethereum, or other chains that are out there. And so what we're researching and developing at the moment, like with the University of Sydney, is having a new kind of virtual machine that will dramatically increase the speed at which you can read and write to data, as well as be able to compress the bytecode to a factor of several X. So right now they have two virtual machines they're kind of experimenting with to see what kind of bytecode compression they can get, and to also make sure that it actually works, like with Solidity. And also they've got a kind of like a temporary solution, I would say, to improving reads and writes on chain, because they've created a new data structure that we're taking a look at, and we're looking at implementing on Fantom first, as well as also looking at longer term solutions where reads and writes will scale independently of the growth in the chain. So the problem is that, for example, in 5 or 10 years, if Ethereum keeps growing, the reads and writes on chain will become progressively slower, and it will just the fees accordingly will continue to go higher. So if we can solve the scalability issue in the middleware as well, the chain Fantom should speed up, by orders of magnitude. And that's something that I think doesn't really get a lot of attention on Ethereum. There's a lot of focus on layer 1 scalability solutions, like with sharding, layer 2, like with rollups, but there's not so much focus on actually improving the middleware that much, and acknowledging that it is a big problem when it comes to executing smart contracts in a scalable manner.
Well, that'd be interesting to see those improvements. I know some of your earlier documents from earlier in the year said you were going to be more of like an Ethereum helper versus the Ethereum killer class. But these upgrades and stuff, it seems like you might actually be more of a challenger. How do you think it plays out versus Ethereum smart contract versus Fantom smart contracts in the future? Do you think you could take some of that market share?
Yeah, definitely hope so. I mean, kind of the future I envision is that there won't just be like a single blockchain or single smart contract computer out there. I think there'll be kind of multiple different layer 1s that continue to exist. And so for Fantom, it's about keeping the pace with the other layer 1s, and also exceeding them as well in terms of the technological performance. So we already are kind of starting to see that, because right now people can use a variety of different smart contract platforms, and it's very easy to switch between them. So for example, on MetaMask, all you have to do is just click on the drop down, put in the chain ID of different chains, of Fantom, of Ethereum, of others, and it's very, very easy to toggle between them. So in terms of us competing against other layer 1s, obviously there is a healthy degree of competition there, because we all want the best technology. We all want the fastest growing platform. However, in another sense, we're not competitors, in the sense that I think a lot of the users don't just use one type of chain. They don't just use Ethereum. They don't just use Fantom. They kind of use multiple chains and switch between them depending on the opportunities that they see on different chains out there. So I think as long as crypto blockchains continue to grow overall, I think the top performing layer 1s in terms of their technology and their growth should continue to do very, very well. And so I don't think in the future that there will just be one single layer one. I think there'll be multiple layer ones that people will just toggle between them.
So, Michael, I've got one last question. It's more about general, not so specific about Fantom, but what's your take on the regulation and U.S. regulators saying that anonymity or pseudonymity in DeFi is dangerous and that should be addressed? Do you think is there a potential good outcome from that, or regulation is always bad?
Yeah, so that's a very good question. So like obviously disclaimer, I'm no lawyer, but obviously I do look into this, and I've talked to like several lawyers about like what's happening in the US and what's happening elsewhere as well. I think what's happening in the US, having talked to several people about it, you've read on the updates that have occurred, from Congress and from the different regulatory agencies, is that the response has kind of been mixed. So on the one hand, they've sort of talked about how they like DeFi, how DeFi is positive, it's transformative, how like the blockchain technology is real, and the US wants to be a leader in it. At the same time, they talk about a lot of these projects like unregistered securities, and also of course are the risks to investors, participating in these markets that are not as regulated as say the trade FI or traditional finance markets. So I think what's going to happen is that you may have some crackdowns on some of the more like obvious like players that are like violating the rules, but on the whole, I don't think they want to scare people and drive people out from blockchain or from DeFi from the US, because otherwise people are just going to move elsewhere to other jurisdictions that are more favorable to them. I mean, we've kind of seen that in the past with different technologies in different countries. Like for example, with China, they said that they don't want mining, they don't want to do anything with cryptocurrencies. So what have people done? Well, the miners have simply moved jurisdictions to the US, to Canada, to elsewhere that that will allow them to continue mining. So for example, like where I am right now in Australia, there's a lot of talk about there being like changes to the Corporations Act to incorporate like DAOs and other sort of positive regulatory responses, where the government is starting to acknowledge that blockchain technology and cryptocurrencies are a real technology that can change people's lives for the better, and so kind of want to like foster that sort of environment. And we've also seen talk about how the Australian regulators have come out and said to Australian banks that they're not allowed to debank people or close people's bank accounts simply because they're using cryptocurrencies, because the regulators have said just because you're using a cryptocurrency, it can no way imply that you've done anything wrong. And so they've actually ordered the banks not to close people's accounts for using cryptocurrencies. So that was a bit of an issue here in the past couple of years ago, but not anymore. So we've seen, for example, like in Australia and other countries, the regulators talk very positively about blockchain. So I hope the US kind of follows in that direction. Otherwise, I think they're just going to lose like a lot of talent.
Awesome insights there, Michael, and we appreciate you walking through what everything is going on kind of with the Fantom Foundation, and more in particular the DeFi ecosystem. We would love to have you on another episode, and I know you have a giant fan base here watching today. So is there anything that you would like to leave the audience with before we shift over to our next segment?
I just like to say to the community, thank you very much for your support. It's a reason why Fantom got to where it is right now, because in the past we didn't have that much community support. Now it's like kind of grown over time, and really we're just developing the technology from the ground up to support the growth of the ecosystem. Because I think when you build the technology out, when you help grow the ecosystem, everything will follow through from it. They're positive and that people like. So it's really the community that have like developed a lot of the applications that are on Fantom, almost all of them actually. And when I was at the Fantom Developer Conference in Abu Dhabi last month, I got the opportunity to meet a lot of these developers, and it was great to see what they're building, and they're all super intelligent, and they're all super motivated and excited to build stuff, and they move at light speed. Like it's just insane, really. So they're very smart guys.
Awesome. Good deal. Thank you for joining us today, Michael, and it was a pleasure getting to chat with you.
Yeah, thanks so much, guys. I really appreciate the opportunity.
Awesome. Good stuff from Michael Kong there, giving us some insights about what's happening inside the DeFi space and inside Fantom and what they got going on. Don't forget, we're giving away 1 month subscription to Markets Pro. Make sure you're tuned in at the end. We're going to be selecting the top comment or question from the show. Got to be there at the end of the show today to retrieve your prize. If you're looking for a 20% discount, look in the description below. Like and subscribe. Cointelegraph on YouTube. We got Markets Pro segment coming in hot. Couple coins that you should keep an eye on based on some of the vortex scores and newsquakes that we've seen. So let's go ahead and jump into our Markets Pro segment for this week. One little coin that our platform, Markets Pro, was keeping an eye on was Keeper V1. If you guys aren't familiar with the Newsquake feature of Markets Pro, it's an automated alert system that instantly notifies users when market moving events happen. That is exactly what happened this week with Keeper. Let's go ahead and pull up the chart. Danilo, please. Thank you, sir. So this week we saw Keeper. It was trading right around $1,000 and has almost tripled in the past week. And what happened was there was an announcement of a new Binance trading pair.
I think we got stuck on a stream, but yeah, Markets Pro, as you can see, there's a news flash. Whenever there's important news out for you, it's going to detect, it's going to alert you. So as you can see on the chart, right before the coin rallied, there was a news flash. So that was one of the use cases for Markets Pro. You back, Benton?
I'm here. Having some technical difficulties today. Thank you for standing by. Yeah, so we saw the announcement happen on Twitter. Shot up from 976 all the way up to 1923. Huge jump. And you're able to see there on the chart. The other coin that we're going to watch this week is we have VGX. For those of you who aren't familiar with Voyager token, we saw the Vortex score. So let's kind of jump over to this chart next, Danilo. Vortex score, for those who aren't familiar, is a comparison between its current market conditions and social conditions of the past. A high score means that, judging from historical data, that asset's current outlook is bullish for the next 12 to 72 hours. So on this chart here, you saw that Vortex score in the dark green, that first circle, that's a high indicator Vortex score. VGX then didn't move for several hours, and we saw it shoot up from 264 all the way up to 423. Hopefully you were able to jump in on this trade, and that's the power of Markets Pro. We're going to be giving away a 1 month subscription at the end of the show today, so make sure you submit your best comments and your best questions, and we'll be selecting those at the end of the show. But that's the power of Markets Pro in your pocket, so we love to see that. So I know Marcel has a lot to jump into today about some conspiracy theories, and you all are going to want to hear this. So make sure you are tuning in for Marcel's expert segment. Let's go ahead and jump in.
Okay, so today we're going to go over one of my favorite topics, if you already know me, conspiracy theories and market manipulation. So this Monday we saw a 11% drop on Bitcoin, and there's a lot of chat on Twitter and Reddit saying that it was manipulation, that whales are pressuring the market to buy cheaper, and etc. So what's curious about that is that on the previous week, on November 8th, we saw a 10% pump, and there was no chatter about market manipulation. So people only complain when market is going down.
Are you suggesting that like they manipulate the price up and down? It's only up? It's not just down?
I'm not saying that it was manipulated or it can be easily manipulated. Those are not my words, but theoretically, it's easier to pressure the market down than to move it up. I'll tell you why. Because cryptocurrency traders are notoriously optimistic. So they tend to use the futures contracts, the leverage for the buy side mostly, and that is reflected on the funding rate, which I'll explain you a little bit later. So whenever the market goes down 10%, for example, it's going to liquidate, it's going to forcefully terminate every leverage buyer who was using 10x or higher leverage. So yeah, it's easier to pressure it down if we're talking about theoretical manipulation.
So what happened Monday? What was like a big move because of like the leverage in the market? What exactly happened this last week?
Good question, Bentham. Danilo, can we share my screen, please? So I was talking about earlier about the funding rate. So what is the funding rate? So whenever buyers are demanding more leverage, this funding rate will be charged on derivatives exchange every 8 hours. And whenever it's the opposite, so the sellers are demanding more leverage, the funding rate will be negative. Traditionally, as you can see on this color chart, the funding rate is slightly positive, maybe 0.2, 0.3, 0.4% per 8 hours, which translates to 0.6 to 1% per week. Okay, it's not such a hefty fee, 1% per week, but if you stay like that for, I don't know, 2 months, it starts to force those buyers to close their positions. But as you can see, the top we've seen over the past days, I don't know, 0.04, 0.05, is slightly less than 1% per week. So it was not excessive leverage that caused the drop. We've seen in the past when market gets overhyped, this funding rate can get up to 0.20, 0.40%, which is like 6% per week, 8% per week. So definitely it was not the leverage that caused that. And I've got another chart here to show that. One sec. So we're going to see the liquidations chart. Danilo, you can share that, please. So what is the liquidation? Is when the trader's position gets forcefully terminated due to insufficient margins, as I explained earlier. So the green candle that you see here, it was the $254 million worth of futures contracts that were liquidated on that day. But that's not too much for me, like 1.2 billion earlier September. So for me, data shows that the funding rate or the leverage was not the leading cause of the drop.
So then what do you think was behind the drop? Jinx.
Jinx.
Okay, so once you understand that $250 million worth of liquidations for Bitcoin is nothing, for example, on that day alone, we traded $90 billion worth of futures contracts on Bitcoin. So $250 million worth, it's nothing. So we can say that, yes, it helped. Maybe it was going to drop 7% and the futures made it down 11%, but it was not the leading cause of the drop. So what I think is that market was a little bit overly excited. Some of the traders were using 20, 30, 50 times leverage. And whenever there's a 2 or 3% drop, which is normal for this asset class, which is volatile, these traders tend to get liquidated. And then some panic gets in store in the market. Wow, it's dropping 5%, 6%. Gosh, I need to close my profits because I bought it at 60 and now it's at 65. So it causes a debt spiral. So nobody really knows what's going on. Maybe it's regulatory risk in the United States, some concerns, some fears. So it's the FUD. It's the fear, uncertainty, and doubt that causes it.
So are we going to zero now, or are we going to go up from here? Like, what's going on? The market's tanking, right? All these people over here is concerned. People are like, do I sell? Do I buy the dip? We got this right here. Oh,
Jordan, you're the expert on that. When the FUD is installed, it might take a couple of months or a couple of weeks for buyers to regain their confidence. So it's a mental game.
That's true. That's why I like watch out for this $100,000 at the end of the year predictions. Like, market starts tanking a little bit. People start getting the opposite of FOMO, which is like no-mo. I don't know. And like price starts going down. Like it'll be interesting to see how this plays out in the future.
Yeah, but if you think it more, if you zoom out of the scenario, if you think, what are the main drivers for Bitcoin and cryptocurrency? There's two of them. The first one is inflation. So people see that even buying stocks or buying real estate or investing in fixed income, if the inflation is 10 or 20% and they're earning 10% yield, or the stocks are going up 20%, they're not really increasing their buying power. So inflation is number one. The second one is government control. For example, if China enforces the CBDC, which is the central bank digital currency, which is not crypto, but it's a digital asset, and they say that 60% of the money can only be spent on food and shelter and stuff like that. So the more control that government and money issuers want over the money, it's going to cause more people to flee from this industry. So those are the two main drivers for crypto. And I see that both of those drivers are trending up. The inflation is trending up, and government control with COVID and whatever is also going up. So Bitcoin is on a path to $250,000 to $500,000, and Ethereum the same way, to $10,000, $20,000. It's possible. I just don't know if it's going to take 6 months or 5 years.
Some bold predictions.
I hope we're seeing six figures by the end of this year. I'm still on. I think the stock to flow model, 100 trillion is still plan B is still waiting for that 98K prediction here for the end of the month. So we'll see. We have 2 weeks almost to the end of November. So we'll see. We'll remain cautiously optimistic for what's ahead. But we are going to dive into this giveaway here today for our loyal audience today. We appreciate everyone who tuned in. We're going to go through some of the comments, some of the questions that you all left, and decide who will get that 1 month subscription of Markets Pro today. So Marcel and Jordan, were there any comments that really stuck out today, or were there any solid questions that you saw floating around the chat today? We want to make sure that we are taking care of our folks that are watching us today on the Market Report. We love having you all here.
Oh, I'm looking through.
What stuck
a lot
out
of
to you
good
guys?
comments. A lot of people like Fantom. I see that. Come on, let's see some good comments. Where we go. And you
saw a
can
lot of
you still have a chance to
Fantom
enter
chat.
people with a good comment for us to answer, and you get a free month subscription.
Exactly.
I like the guy Jemo. He said everything is better than Solana, and I agree completely with him. Solana has a CMO, has a marketing team. It had an outburst of 18 hours with no blocks being mined. So yeah, I'll go with Jemo. Everything is better than Solana.
Are we going with GMO today? Jordan, what do you think?
Well, I'll defer to Marcel on that one. If he likes that comment, that's good enough for me.
Marcel, can you pull up the comment? Or Adrian, someone, let's pull up this comment. I think GMO might be our winner today. If GMO, you are still here, let's go ahead and send a friend request and a DM to Cointelegraph on Twitter. If you are still here, we're going to give you that. If we're going to we need our Twitter handle first. We're getting our word from our producer here. So Twitter handle in the chat, and then send us the DM on Twitter. We're going to get you that 1 month subscription. For everyone else that's watching today, if you're looking to just get 20% off into Markets Pro, go ahead. It's in the description below for our YouTube video, and make sure you follow us on Twitter. JMO, if you are watching, make sure you respond with your Twitter handle here and send us a DM on Twitter. We're going to get you that 1 month subscription. We appreciate you tuning in. Looks like, Marcel, you're saying Yama Blue also had a comment. No need to access the Fantom.
Yeah, United States have no access to Fantom. It's like 40% of the global users of crypto, and United States have those draconian laws against those things. So Yama Blue also has a point.
Very
the
good.
U.S. has a lot of issues with just the regulation front of things. Like, they're going to need to get their act together. They're going to stifle any kind of innovation here, and it's all going to happen in other places. They're going to cause me to move to a different country.
Oh no. Well, we gotta figure out that regulation here in the States. It's getting, I think, on its way. Infrastructure bill this week. It looks like a lot of people are up in arms about some of the tax aspects of that and defining what a broker is. So maybe a good conversation for next week. But if you're watching JMO, make sure you DM us. We're going to be on Twitter. We're going to be giving away that 1 month subscription. For second place runner up, we'll have Yama Blue. If JMO doesn't respond, Yama Blue, go ahead and send us your Twitter handle here and search us on Twitter. We are Cointelegraph. Yama Blue as a backup, go ahead and send us that DM as well. You will be the runner up just in case JMO isn't watching. We appreciate everyone for tuning in today. This was awesome. Huge show this week. Crazy markets. Remain calm. Any closing thoughts, Jordan and Marcel?
Yeah, remain calm. The long-term outlook on this remains bullish for me. Like if there is a pullback in the market, that's just a better opportunity for buy. If you got tokens that kind of shoot up, I'd say I take profits. That's not investment advice. That's my own opinion. But and Fantom is on Gemini. Just so you know, somebody did point that out here in the comments. Fantom is on Gemini, so U.S. people can access it. But yeah, don't freak out. Take deep breaths. It's all going to be all right, folks.
I agree, Jordan. I would say that retail investors do not use leverage. And if you're going to use it, maximum 2 times leverage, no higher than that. Don't get liquidated. It's not a short-term game. We're aiming for 10 years. So don't get liquidated.
Exactly. Hodl strong. Take your profits. Thanks for joining us today on the Market Report. Until next week, thank you all. Make sure you like and subscribe on YouTube. We are here Thursday afternoons, 12 p.m. Eastern. We appreciate everyone tuning in. We love you all. Thank you. Until next week. Over and out.
Peace.